the close. But I do want to bring Dale Smothers into the conversation, joining us this morning, President and CEO over at RDS Wealth Management. Dale, great to have you on the show. Now, I did not know that we were going to play Wheel of Fortune, but as soon as I saw your notes today, we are starting with Wheel of Fortune today. You said that you only need 3 letters and 2 vowels to solve what is going to take our markets higher. You need an R, N, a D, an A, and an I. So can you solve for us, please?
That's exactly right. And if you were Vanna, I would ask you to solve this puzzle with 3 words, AI and Iran. That is what the market's focused on over the next couple of weeks. Artificial intelligence spending and build out of the infrastructures, profitability. Micron's earnings are front and center this afternoon. And then we've got Iran. Iran has to be resolved going into the end of the year to hit what we deem to be the target of the S&P 500 at 8,000 by the end of the year. I think we get there, Marley, and it's on the back of lower oil, cooler inflation, which obviously is surrounded around Iran and this crisis resolving, and then artificial intelligence build out and profitability hopefully coming to those earnings, along with the ability for employees to do more with less. This type of strategy is going to make earnings go higher, in our opinion, and for that reason, we believe the S&P 500 hits 8,000 by the end of the year.
2 things, Dale, is the bigger threat to your 8,000 target. Is it the situation in Iran and some sort of escalation there, or is it a reduction in AI spending or lowered earnings in the AI space?
Yeah, I think if earnings do not come out with a forward guidance, so these quarterly earnings calls that we listen to, we're really paying attention to the CEO's forward guidance. And that forward guidance is going to be hindered if artificial intelligence perhaps is not as profitable. Perhaps it doesn't bring the type of productivity that we desire for the marketplace. And another one is the the Iran crisis, rather. That Iran crisis is, if it rears its ugly head again, Marley, we could see oil spike once again, and that will create uncertainty with the Fed. Clearly, the Fed raising interest rates would not help the markets overall, and it would also hinder forward guidance in the next quarter's earnings that we'd be paying very close attention to. The CEO is going to have a hard time giving us any kind of forward guidance if, for instance, they have no idea where oil is going to be 2 to 3 months from now.
And Dale, I want to talk about something else that stuck out to me in your notes here. I love that we got to kick off with the unexpected game of Wheel of Fortune, but you were taking a bit of a contrarian stance in terms of the Fed and the path forward here. You disagree with investors who are starting to price in the possibility of rate hikes. So what do you think those investors are getting wrong? Because, I mean, I'm going to refresh the Fed Watch tool right now, but I mean, as I was looking, we were at about 89% by end of year.
Yeah, 89% by end of year that we will have a Fed rate hike. And my belief is that all of this is revolved around the short-term effects of oil. We saw this morning, if you were watching pre-market, oil traded at a 6 handle very briefly in the futures, and that's even with the potential for an uptick in tensions in Iran. When that gets resolved, I think the Fed has room to pause here, to stay stable in rates. And stable rates, higher earnings, continued AI demand leads the market higher. And again, if the Fed does come out with a rate hike, it's going to put a little bit of a speed bump and perhaps even push the pause button on this bullish stance that we take on the S&P.
I mean, we had a 6 handle at the top of the show. I mean, I'm just looking right now. We've still got it. We're at 69.75. So, Dale, yes, we are lower here. But, I mean, realistically, how long does that really need to feed through before we stop seeing the effects of this inflationary episode that we're seeing because of these higher oil prices?
Oil bleeds into the gas pumps. We're aware of that, and gas bleeds into everything that we see: shipping, manufacturing, energy, and just in general, energy across the board. This type of lead time, unfortunately, Marley, you and I are both aware that it doesn't take long for gas prices to rise when oil goes higher, but it takes a little bit longer for some reason for gas prices to fall when oil comes lower. And I think that the the administration made some announcements this morning that they're going to be watching this to make sure that that doesn't take place, that there's not some sort of price gouging. But the economics behind it all is that if you bought a barrel of oil at $120 a barrel, you've got to make that barrel of oil profitable. And so it might take 2 to 3 weeks to bleed through the system and actually hit the gas pumps for us to fill that. So we've got to stay at this 6 handle for 2 to 3 months before we actually start to feel the relief from inflation. And I'm going to tell you, if it goes much lower than $60 a barrel, that could put strain and pressure on the markets in a totally different way. No one wants deflationary environment here. We just want inflation to stay stable and not go off the rails.
Yeah, trying to strike a balance here. Also trying to not pay $6 a gallon for gas here in Chicago. It hurts me every time, Dale.
True.
But last question here before we have to say goodbye. I do want to ask you about Micron and your expectations here. I was just talking to Alex Coffey about sort of the general consensus expectation. I mean, we have seen from Micron, I mean, last quarter, incredible results. I think they beat on earnings by about 33%. It may have been even a little higher than that. And we saw them move more than 4% lower to close out the next session. I mean, they've moved lower 5 of the last 6 sessions despite consistently beating on earnings and guidance. So what are you expecting, not just from the numbers, but from the reaction?
Yeah, I think that the reaction is going to be violent one way or the other. And it would not surprise me one bit if they beat on the numbers and the market sells off. Again, this is kind of a sell the news type of event. We are believers in Micron. We think that, just like Alex said, it's going to likely go higher with the S&P 500. Alex didn't necessarily reference that, but he referenced the correlation between Micron and the S&P. We're bullish on the S&P. We believe that names like Micron are going to lead us higher. And I'm going to tell you that this is a supply and demand story, Marley. This is what our viewers need to realize. Memory is in high demand and very low supply. And this idea that supply gets any better, or that perhaps demand gets any lower, is very unlikely going into the end of 2026. 2027, I think it begins to get even worse. And so a name like Micron goes higher simply because of a supply and demand of memory.
Dale, always a pleasure to talk to you. Thank you so much for joining us this morning. We love having you on the show. Dale Smothers, President and CEO at RDS Wealth Management. And we've got a lot more for you today, so don't go anywhere. We've got the big 3 coming your way: 3 stocks, 3 charts, and 3 trades for you. Rick Ducat will be taking us through the technicals. Don Kaufman will be joining us to take us through his trades for CME Group, DoorDash, and Caterpillar. That's next on Trading 360 on Schwab Network.